Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Hey everybody, welcome back to the Investing Podcast presented by Tusk Media. Back as always for the Stock Market Power Lunch, first one in about 2 weeks. Switching it up by actually doing this and bringing Ben from the morning. So we dragged along, I'm Andrew Hall, this is Ben Nye. Ben, how's the day going?
It's going well, a few hours into it, a little later than normal, but...
Yeah, I kind of feel like a little bit more refreshed.
Yeah.
I feel like normally in the morning I'm trying to guzzle all the coffee I can to get going, but just ate taqueria tsunami.
Excellent.
Excellent.
Nice.
I had tacos, but wrapped in lettuce. So
I had a couple tacos wrapped in.
Made me feel better about like my fried shrimp and all that kind of stuff.
You had the queso too.
I did. Also the tater tots with queso.
Those are fantastic.
Very good. Very good. So great lunch, power lunch, if you will. We'll jump in. We got a lot to talk about. Greengasm going on right now. Dow is up 69 basis points, so a nice day for the Dow so far. S&P up 71, NASDAQ up almost 1%, up close to 90 basis points. Global Dow up about 1.5%, gold up 1%, oil up 2.2%, slowly creeping back up again. By slowly, I mean really quickly. It seems like every day oil moves like 1.5+%.
Oh yeah.
One way or the other. Crazy volatility up above $46. Seems like not long ago at all. We were just talking about how it's down in the dumps. But positive market trajectory after a really strong day yesterday. We didn't come back after the Fed release, but markets closed up more than 1% across the board. Fed, what's your take? We weren't surprised. Any commentary to offer?
Yeah, well, the last couple of weeks, the expectations really just ratcheted down and down and down, and all of a sudden now it seems like maybe they'll do something in December, maybe not. It's just incredible that at the beginning of this year they were talking about 4 rate hikes.
It's crazy.
And we might not even have one.
Yeah.
And in fact, the market probability I think is less than 50% for December.
It's wild, and I think you're starting to see that frustration. Couple quotes from a couple people. Richard Moody, chief economist at Regions Financial, says there's only so many times that you can lay out the case to hike and then do nothing and still expect to maintain your credibility. He added that the Fed is perilously close to losing that credibility. Tom Porcelli from RBC basically said you got these conditions, and they've laid out the conditions, and he said, in theory, theoretically, we should get a rate hike, unless, of course, something pops up that derails them. For those with short-term memories, please keep in mind that this Fed is easily derailed.
Oh, yeah.
So catching some flack, catching some criticism, it seems like this constant back and forth between them not wanting to surprise the market, which we've talked quite a bit about, but still kind of this halfway endorsement of economic growth.
Yeah. It's almost like it's an asymptotic kind of chart. Like they're trying to say everything that they can. They'll change a couple words to get even closer, but they never actually hit that line.
Exactly. If the expectation is this, they get as close to it as they can. They just keep redefining that curve. You keep zooming in. I don't know if you remember those old TI-83 calculators. You zoom in on the graph. You keep thinking, oh, we got to be running up to that axis now. We're just not.
Right.
We're just not quite getting there.
Yeah, and interesting that they had 3 dissents. So there is a bit of division in the Fed. So not only externally are people starting to get upset, but internally as well. So it'll be interesting to see what happens in the next few months.
Yeah, absolutely. So for the meantime, market doing well. Speaking of doing well, the unit, Matt Krebsbach here at Narwhal Capital and Tusk Media, he's got an article up on Orbital right now. We don't want to spoil much for it. We'll probably get him out to talk about it some. But go to seekingalpha.com if you're an investment analyst or somebody that deals with portfolios. Check out the site in general. It's a good resource. But just type in the ticker for Orbital, OA. You can read his article. It's up as of right now. Lays out a case for owning Orbital, which we do for our clients. So check it out. Interesting piece. Always cool to see people at Narwhal get published at big-time sites. And
it's a pro article.
Yeah, he's a pro. Don't let it go to his head. But Matthew Krebsbach, pro. Big time. Yahoo, not a lot of good news when you're getting hacked.
No, I think they need to hire Krebsbach for a little of their content. Actually, he's pretty good in Narwhal too. So.
Yeah. They need a pro.
Yahoo, $200 million. That's
crazy. we got to be hoping for like a Wells Fargo scenario where they're like, well, only like half of them were real accounts.
Right. It's just incredible. I mean, they sell the company, so thankfully, for them, they're out. But I just don't know what Marissa Meyer did to that company. I was looking at Yahoo Finance this morning, and I was just appalled by how the quality has just deteriorated so much.
Yeah.
Same can be said for their other products too. I mean, their mail product, which I've used, and I have my personal account with them, and it's just deteriorated.
200 million. I mean, that's just a staggering number. It's ugly.
Yeah.
It's going to probably stay ugly for the remnants of Yahoo. On the upswing, we're getting great news, bold predictions, bold aspirations from Zuckerberg.
Yeah, I guess all diseases will be cured in our children's lifetime. He's putting $3 billion, because no pharmaceutical company ever puts.
You can never have billions of dollars.
Right. So Zuckerberg and his wife are putting $3 billion, and they want to cure all disease in their children's lifetime.
I hope those kids live a long time.
Yeah.
I mean, they're going to have to. They're going to have
to forever.
To actually cure them. I mean, that's. I don't even know what to say. I mean, it's staggering. Like, on one hand, you read it and you're like, great for them. On the other hand, you're like, could have donated the same amount of money, or if we're being honest, a lot more, and not put a ridiculous goal attached to it.
Yeah.
And it probably would have been better received.
Yeah, but we're living in Muskian times.
Yeah, $3 billion curing everything. If only we donated $3 billion to such causes previously. Solar City. Speaking of Musk, great setup right there. Solar City. We like to dump on this company, and I think we've got a great chance to do so right now. So they're cutting marketing costs. To give you some context, last year the company generated $400 million in revenue. They spent $751 million on sales, administration, and research. So not great performance right there.
But if you make 50 cents, if you spend $1, I mean, that's
you still made 50 cents.
Right?
Yeah, exactly. So they're cutting on marketing, probably a fantastic idea, but they're getting real savvy and sophisticated with it. When you think about people who can market technologies that are self-sustaining, like solar energy and solar panels, the number one thing you think of is what? You're right. Uber drivers. Uber drivers. So they're going to get Uber drivers to sell solar panels. I don't know about you. I enjoy a good Uber driver. I like to make conversation with them. Try to stay in touch with them, exchange emails every once in a while. That actually happened one time. The last thing I want, if I'm in a ride for a night out on the town, is to be pitched a solar panel. That sounds absolutely miserable from an Uber driver. This is one of my favorite awful ideas of the year.
You know a better awful idea is to have them just play the Tusk Media podcast on loop the whole time.
And that will sell the panels.
That will sell the panels.
Like, oh, Solar City, let me check this thing out.
Right.
They'll get on their Yahoo finance page and go through it. They'll read our Seeking Alpha stuff, and then they'll buy solar panels.
Yeah.
This is all coming together.
Synergies.
Master plans. Master plans right here. Hit us up, Musk. Solar City, home sales, existing home sales down for a second month in a row. Not necessarily devastating right now. There's, I think, 4.5 months of inventory of existing homes. Normally that's around 6 months is kind of the normal average. You read into a decline in existing home sales much?
It's interesting. Everyone says that it's a supply issue, and that there's just not enough supply of homes on the market. I really don't know what to think of that. I think it very much depends on where you're located.
Right.
Because I'm sure there are definitely places in the United States where things are strong and where things are weak.
I think you probably see, exactly that. You see a lot of geographical trends and location. Right. I mean, that's the 3 keys to real estate. But then the other side of it is you're not getting a lot of first-time home buyers. Those numbers are still relatively low. Housing prices are pretty high. The average home sold, the average existing home sold, was right at $240K for August, which is a pretty strong number.
Yeah.
So prices are relatively high. You've also got people looking for non-market correlated assets. I think you got a lot of investors in the space right now, further driving that and making it harder for first-time home buyers to get in. I think it's still relatively difficult for first-time home buyers to get lending,
Mm-hmm.
because we're still kind of seeing those challenges of a low rate environment that's still, I guess, in theory, recovering from a previous crash that's now almost a decade ago.
Right.
But so I think it's difficult, and I think that hurts it as well. I mean, I think that hurts, kind of this self-fulfilling cycle in some regards. But I don't know that's necessarily anything to panic about. I mean, you still think about it, and the odd side to me is I don't feel like that's necessarily the case where we are now in terms of inventory being too low. I mean, I would be surprised but I'd be surprised if we had 4 months worth of inventory in Metro Atlanta. That seems high.
I agree.
I don't know if you got anything else. You got any closing thoughts?
That's it for me. I'm excited about talking about football tomorrow.
We're going to hit football tomorrow, revised format of the investing podcast. We're going to blog about it. We're going to write a little article about what we're doing. So you guys check that out at narwhalcapital.com/blog. We're going to try out a format a couple times, see if we like it. Not to throw anything off, but we're going to have real segments. We're going to have long episodes, and we're going to try to consolidate all this into one a day and get everybody involved. So we're going to at least try it out tomorrow. We'll take it from there. Y'all have a great afternoon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.